Welcome back to our newest episode of the Lady Landlords podcast. Today, we're going to be talking about hard money lending with Michael Haberman from Rock East Funding. So, Michael, thank you for joining me today. I appreciate you coming on the show.
Thanks for having me. I'm really happy to be here.
So, what I would love to just start with is just who you are. Introduce yourself to our listeners for us, if you can.
Sure. So as you said, I'm Michael Haberman. I am a principal in Rock East Funding. We are a family-owned hard money lender for real estate investors. We're actually one of, if not the longest, sort of continually operating hard money lenders in the area, in the New York tri-state area. My dad actually is considered one of sort of the founders of the modern version of hard money. He started doing this with a partner in the early to mid 90s. And then my brothers joined him, and then I joined him a little bit later. So that's who we are.
How did he kind of get involved in that, if you know?
Yeah, no, I do. So growing up, my dad was a real estate attorney. But it's interesting, he wasn't a buy and sell houses. He focused on people who were buying apartment buildings and converting them to co-ops and condominiums. It was my first introduction into real estate investing, because that's what it was. It was a big real estate investment, and that's what he did. And there was a huge, I don't know all the details. If I did, I wouldn't bore you with them. But basically, in the late 80s, there was a change to the tax code that kind of took away a huge incentive for that business. And so one of his clients who was doing this had a lot of money. And started lending in this hard money, mostly in the New York City area. And at first, my dad was doing all his legal work. And then he came in-house and he became the president of the company. And ultimately, he was his partner, and it grew and became a big hard money lender in the city.
That's very cool. And once again, try to go back to tax codes in the 80s. Don't worry. We definitely don't need to get into that. But that's really cool just to see, one, how long your family has been involved in this. Yep. And really that a lot of the structure and how things are put in place really kind of also came from your family starting this business so many years ago. Now, was this something that kind of like growing up that you knew you would end up doing and getting involved in?
So no, interestingly, not at all. In fact, I'm relatively new to the family business. So my brothers have both been in business with my dad for a long time. I actually went a completely different route, even though, as I said, I was exposed to real estate investing very early on. I went a different route out of college. I was a newspaper journalist.
Very cool.
I worked in city government. I actually worked on the rebuilding of Ground Zero for a couple of years after.
Oh, wow.
And then I worked in the nonprofit world. I worked at a large university, and then I ran an education nonprofit for about 7 years, which was a really, really great experience. And then what happened to me after about 20 years, and I if you don't mind me sharing this, because I think it's so relevant to so many of your listeners and your group, is after 20 years, my oldest son was starting high school, and I was commuting to the city and, getting home at 7:30 at night and missing baseball games and barely seeing them. And I was like, is there a different way to do this where I can have more control of my life, right? Which is what drives so many real estate investors.
All of us, yeah.
And so even though it was an amazing, 20-year career, but then I said to the family, hey, what do you think if I, maybe join you? But I have to say, they didn't say, hey, come and join us. They said, come in and try and build your own book of business, right? And then you can join us.
Exactly.
Taking what we do. And so that's where, I've been focused, as building out the business north of New York City in the Hudson Valley, the Connecticut area for the past few years. So I didn't start here, but, now I'm here, and it's been great. And it's a great opportunity to work with my dad and my brothers. That's not many people have that opportunity.
No, as long as you can get along, perfectly fine, right?
More details I won't get into, like the tax code.
Exactly. But that's really interesting that you were doing something so completely different before, because you are completely right. I think there is a point when many of us, we kind of finish college, high school, whatever it may be, kind of go out into the workforce. We take these jobs, these office jobs that we think are just what is expected of us. And then I feel like that's why a lot of us tend to find real estate investing a little bit later on in life, just because we're sitting there and we've worked for 10, 15 years and we're like, wait, this isn't the wealth I was promised, right? I was told that if I worked and I did this office job, I'd get promoted, that I'd be making more money. And that's just not the case. And we start to look for alternative ways to find financial freedom, increase our investments. And I think that's what actually leads many of us. And I definitely can speak for the lady landlords. I know that we are women that are looking for those other opportunities. And that's actually how we found our way here. So and I always tell people too, within real estate investing, that you have to remember that there are a ton of different things you could do in real estate investing. All because you want to be a real estate investor does not mean you have to flip houses or own rentals. There are plenty of different ways to get involved in real estate investing. And honestly, being a hard money lender is absolutely one of those options.
Yeah.
So then let me ask you this. What is a hard money lender?
Oh, great question.
I think you know the answer to this one, right?
So hard money lenders, in general, I don't know that you and I have talked about this before. I don't know that there's, a legal, Webster's dictionary definition. But in general, what hard money lenders are doing is they are lending to real estate investors for a short period of time, typically on a distressed property, right? And so the whole idea is that we see the long-term value in a distressed property. And so we're willing to base a loan based on what that property is going to be worth, not what it's worth right now, right? So typically a bank, if you wanted to buy a vacant property, right, the bank's going to look at it and say, well, this is only worth X and we'll lend you, X. We look at it and say, well, this is what this is going to be worth. And so we will lend you based on what it's going to be worth. So typically hard money loans are short-term loans for distressed properties that include some component of renovation funding involved in the loan. So it's for the purchase and the renovation. Obviously, typically hard money lenders it's much less of a paperwork process to get a loan from a hard money lender. So from us, we look at credit, we have an application, but for us, a big thing is experience, credibility, getting to know the borrower and the confidence that they're going to be able to complete the project, as opposed to a bank, which wants, 8 years of tax returns and 40 W-2s, and all
exactly.
that.
And your child's birth certificate and everything else, right?
But by the way, I happen to not like the hard money term, for a number of reasons, but I did do some research, and according to some websites, it initially meant that you're lending against a hard asset. And that's where the term hard money came from, that you're lending against a hard asset. And at a time, even when my family was first in it, it was almost like they didn't even care about the borrower. It was really just based purely on the property. That has changed. And I think that now people look both at the property and there is some review of the finances of the borrower themselves.
Gotcha. So that definitely helps. So I want to break this process down. So I'm going to ask you a ton of questions to really make sure that our listeners fully understand not only how they can best use a hard money lender, but also then kind of what that process looks like. Yep. So first question within that, can you briefly describe the difference between a hard money lender and a private money lender?
Sure. So again, I don't know that there's a legal definition of this, but in general, in our world of investors, I think a private lender is typically, Aunt Becky has $200,000, sitting in the bank account, and she's willing to make some money, and she loves her niece, and she trusts her, and she says, yes, I'll give you this money, and we can negotiate terms, and maybe there's no mortgage on the property, and we're family, and we love each other, and I'm just willing to make this loan to you and make a little bit of money. Hard money lender is typically a company like us, right? And so there's going to be a more formal process. There's going to be a mortgage on the property. There's going to be set terms. It's going to be a more formal relationship. Now, by the way, I say to people all the time, if you have a private money lender that you like, that's great. Use it. It's going to be less expensive. It's going to be easier. The downside is typically when you want to get to scale, Aunt Becky might only have $200,000 and she's done that one house and now she doesn't have any more money for you. Right. And so now what do? You want to go into contract. So a good hard money lender is always going to have money. They're never going to, run out of money. It's never going to be an issue for you that, you can't get the deal closed. And so then it becomes that trade-off of, okay, I'll just make it up. Aunt Becky's charging me 6%, but I can only do one deal, right?
Exactly.
Now I'm paying 10% with a hard money lender, but I can do 3 or 4 deals at a time. And that's that leverage and multiplier effect.
I'm so waiting for this podcast episode to come back and like bite me in the butt in 20 years when my goddaughter is old enough to listen to this, and she'll be like, well, he said I could go to Aunt Becky. So we'll see what happens there. But so I think that's really important. That's something that I want to make sure to highlight. We've done this in other episodes on the Lady Landlords podcast. If you want to learn more about then the private lender, make sure to go and listen to our episode about private lending with Hillary Romero. So go back and learn that. But that's really what we want to make sure we're separating a difference between what we're looking for between a hard money lender and a private money lender, since they are kind of different assets. So one of the most important things that you just said, that when I first started learning about hard money lenders, that always begged this question, was one of the things that you just said was that, Aunt Becky might run out of money, right? She can only fund one deal, but a hard money lender will never run out of money. Where does this money come from?
It really depends on the hard money lender. It could be family money, it could be investor money. With us, it's a combination of our own money, investor money, bank money, funds, sort of like hedge fund. I don't know if that's right, but so it's a combination. So different people do it differently.
Of course,
combination, so it's funny. As one of the things I tell people, we are a family owned and operated business, but in a typical year, we'll do about $65 million in loans. And I always, my joke is, if I had $65 million of my own money to give you, I wouldn't be sitting here. I'd be sitting in a place that looks like where you are, Becky. I'm writing checks from there.
Exactly. Well, you'd be having somebody else write your checks, right?
Exactly.
While you're sitting on the beach down here where I'm in the Dominican Republic. No, 100. Well, that's why I always find that question kind of important. That's kind of what's been explained to me too, is it almost in a simplistic way here. It's almost like you did the work to get the private money lenders before they put it in a fund with you. And now you have the business of kind of dispersing it. So that's once again why a hard money lender would have those funds rather than a private lender, which only has what's in their bank account.
But just to clarify, like any other industry, right? And there are a lot of good hard money lenders out there. We know lots of them. We compete with them, but they're good. Like in any industry, there's some that aren't as good, right? And that is one of the things sometimes where there are hard money lenders who say, "Oh, we have plenty of money," and then the day before you're closing, all of a sudden they don't have the money. So like anything else, it's it's part of your due diligence to make sure you're dealing with a reputable hard money lender.
So let's start there then when talking about kind of this process. So someone goes out and says, I want a hard money lender. So once again, we're breaking this down here. In what situations would a person want to find a hard money lender versus just going to a bank?
So again, as we were saying before, typically someone who's coming to a hard money lender is buying a distressed property, right? And often, your clients are buying a foreclosure that is vacant, run down, there's no electric, there's no water. Banks just aren't going to lend on that, right? But even if they did, they're probably going to lend off of the value of what your current value, right? So you're probably not going to get enough money to do your renovations and everything.
Very true.
And, they're typically in like longer term loans, right? So for a hard money loan, again, no property scares us, right? The whole idea that it's distressed and you're getting a good deal on it. We're going to provide you the renovation funding, and our loans are 1-year loans with no prepayment penalties. So, you're done with the property, you sell it, you refinance it, you move on. The other thing is these typically, I would say, and by the way, we can talk about this. Banks absolutely have a purpose. This is not me trying to bash banks, but in this situation, if, in normal times, you go to a foreclosure auction, you need to close in 30 days, right? I mean, we know even in normal times, it's going to take 90 days. Now I'm hearing them taking 4, 5, 6 months. So it's just the speed. Whereas, we can close a loan in, we typically say 10 days is a comfortable time frame, but we've closed loans in, 48 hours when we need to. So that's also is going to be
huge bonus.
Huge
So
bonus.
then, so what I'm hearing though is that people aren't necessarily coming to you for a turnkey buy and hold property that they're going to rent out and they want to hold and own for the next 30 years. They're not coming to you for those loans. They're coming to you for those distress loans, for the
So
properties that a bank doesn't necessarily want to touch.
yeah, correct. When we talk about hard money, yes, we actually do offer a 30-year product on rental properties,
Okay.
just like similar to a bank loan. The
Hmm.
difference for us is they are based purely on the cash flow of the property. They're not based on the borrower's finances. So there's
Okay.
a lot of situations, here's a place we won't get into details again, but maybe a real estate investor doesn't show a huge amount of income on their tax returns, right? But they do
Hmm.
have the capacity to buy a property, and it's a really good deal. So we have a product with similar to banks, 30-year fixed, 5-year arm, interest only, on rental
Okay.
properties that are based only on the cash flow of the property and the credit score of the borrower. And again, an advantage
Okay.
there is we can typically close those in about 30 days. But I don't think that's something we offer, but I don't think that's typically what people consider hard money, when we're talking about hard money.
No, but it's great for people to know that that's actually an option. That if there's something going on with their finances that they personally cannot get that traditional bank loan for that long term buy and hold, they
Yeah.
still can talk to a hard money lender if there's enough kind of cash in the deal, right? Like you're saying, there's that monthly cash flow because you're looking a lot at the asset, not solely the person, which traditional banks are really looking at. So that's a good distinction to still know that that's possible.
And just
Now,
Becky, just one thing on the
yeah.
speed, if I meant on both of these, not only like foreclosure scenario, but as your listeners know, often you're getting a good deal on a property because the current seller
Hmm.
wants out. So if you can say, I can
Yeah.
close in 30 days, even if it's not a foreclosure or an auction, it's just a private sale. But the person's saying, I have a client right now, the person's saying, if you close in 2 weeks, I'll sell it to you for 30 grand less, right? So again, that's where the advantage of our speed comes in.
And it also comes through as a cash offer, correct?
Yes.
So
Now
that's also,
yes, that depends, it depends on the
mhm.
sophistication of the seller and the broker and if they understand what hard money is. But
Okay.
most of the time, if someone's been in the business, they'll take hard money as cash.
Sure. The reason I bring that up is especially with us, both of us, being from New York, and a lot of our listeners kind of in these higher competitive areas, and especially what's been going on with the market during this pandemic, you're hearing a lot more people saying, I'm being outbid by cash buyers, right? Not saying that those are necessarily the properties that are going to be the right fit to go to a hard money lender, but I just want to kind of highlight that using a hard money lender, that is also kind of a bonus. Once again, I understand that depends on the conversation and the deal, but it is something that I want our ladies to
Absolutely.
kind of keep in the back of their
Absolutely.
mind. If they keep kind of being outbid by those, that this is another kind of opportunity to look at to have then that cash rather than saying, well, I'm doing an owner occupied loan where I'm putting down 3.5% that, is just kind of getting passed over in a lot of these higher competitive markets.
Yep.
So now we know the reasons that people are coming to, right? These distressed properties where they need that cash and quick close, or where they're looking, or in some situations where they can't get approved by a bank, even for that longer term. So when they do, one of the most popular questions that I always see being asked in the group when they ask about a hard money lender is looking for a hard money lender in the specific state or area that they actually are looking to buy. Is that important? Or can you, Michael, lend to other states? I know the answer to this, but I want you to share.
So, so we can lend in most states throughout
Hmm.
the country. Personally, what I think is really important is sort of when you're talking to hard money lenders, the sort of level of service that you feel you're going to get, regardless of
Hmm.
where they're located, right? So, are you comfortable that when you're getting ready for closing and you have questions or someone you're going to be able to get on the phone quickly, right? Because as we're just talking about, these deals move quick, right? When
Hmm.
you're doing your project and you want a construction draw, are you comfortable that it's someone who you're going to call and they're going to get it on it that day and you're going to get your money in a couple of days, not in a couple of
Hmm.
weeks, right? So I think those are really the key things where they're located. Listen, we do a lot of business in the New York tri-state area where
Of
we are
course.
located, but we also have loans in other states across the country. And for us, it there is going to, of course, it's going to be a little bit of difference, but our clients in these, we have one in Washington State. They know, hey, I need a construction draw. We're going to get on it. We're going to get our person in Washington State, and they're going to get their money quickly. So that to me is the most important thing, is make sure it's someone who you feel. So with us, as I said, we're owned and operated. We don't have 800 numbers, right? My clients call me on my cell phone all the time. There's something, if they're sitting at the closing table, they're not calling, a closing department, trying to find the right person. The money hasn't been wired. They're calling me on my cell phone. They're texting me on my cell phone. And we've been in this business a long time. So we know those are the things that really matter for investors, that when they need something, they get it quickly. To us, that's really, that to me, that's my advice. That's the differentiator.
No, I think that makes perfect sense. And it's, once again, being New Yorkers, we're seeing a lot of people that are looking to buy in kind of other states.
Yeah.
And I feel like that's one of their struggles that I see is, oh, well, I'm in New York, but I want to buy in Oklahoma. But now, oh, I got to find a hard money lender in Oklahoma. I don't know how to do that. But if you have that relationship with that person, then that's actually kind of the best way to start, is to have that relationship and then be able to take your New York hard money lender, or whatever state you're personally living in, to then the place that you would like to buy. So I just want to make sure that people understand that hard money lending does cross state lines, which is really cool. So build that relationship through your local networks, through the people that you know, through the Lady Landlords networking meetings. So then that way, when you, regardless of where you're purchasing, you can still work with that person at your relationship, and you're not just kind of looking for a lost referral. So now we know then that we know what we're looking for when we call a hard money lender. Now we know that you guys can cross different state lines, and you'll be able to help the same person, regardless of kind of the location necessarily where they're buying. Now, one of the next questions that always comes up with hard money lenders is, how do I know this is not a scam? What are the ways that people can vet a hard money lender? Like, what are the red flags that people should be asking for, right? You always kind of hear like, oh, well, if anybody asks you for money up front, that's usually not like a good sign. Like, what are like the telltale signs, Michael, that this is not really a hard money lender, that this is somebody that's trying to take advantage of our ladies here?
So, that's a really good question. I think you hit the most important one, right? So
Yeah.
when you're asking for $1,000 application fee, to me, that's a red flag. By the way, there are some legitimate hard money lenders who do ask for that. But I think a large application fee like that is a big red flag. But what I tell people is, make sure you get all the details of the terms, written out in an email, right? Not just phone, and make sure you understand everything. So I'll just give you an example. Often you hear, oh, 7%, right? And okay, yeah, the rate is 7%, but it's $1,000 application fee. It's 4 points. They're charging what we call full boat interest. So that means, just to take a step back, typically on the renovation loan, you get your money as the project's completed, right? You don't get it at closing. For us and many other lenders, you only pay interest on that money as you get it, right? So you've finished a quarter of the project and you've drawn down $25,000 in renovation money. Now you start paying interest on that money, right? With a lot of other lenders, let's say your renovation loan is $100,000, but you don't have any of it, the day you close, you start paying interest on that $100,000, right? Now, all of a sudden, that can add up, if it's a big renovation project, right? So I would have to say, I don't, fortunately, I haven't come across a lot of just pure scam artists, but what I do come across is like the rate just seems too good to be true. And when you crunch all the numbers, it actually is too good to be true, right? Or another thing to look out for is inspection fees, right? So everyone's going to charge an inspection fee. We do, because someone has to go out and inspect the property. But is it an inspection fee plus a draw fee plus a large bank fee? That's where it adds up. So, but the biggest thing that I tell people all the time, and again, I think this is where we excel: ask for references. Any lender is more than willing to say, sure, here's a client you can talk to. And again, as you said, people in your network, whether it's Lady Landlords or your local meetup, you're going to
Mhm.
find people who are reputable and trustworthy. And here on this topic, the one other thing I would also say, and I think you would agree to all of your listeners, rate is important, but it's
Mhm.
not the only thing to consider, like in anything else, right?
Yes.
So I might save a quarter of a point, but what kind of headache is that going to cause me down the road, right? Look at the full
Mhm.
package. When you're doing an investment property, time is money, simplicity is money, right? So you've got to
Yes.
look at all those things. And I go back and make sure you're just dealing with someone who you feel comfortable with.
100%. Once again, when you're talking like a small percentage difference, I'd rather, like the scenario you gave before, I'd rather pick up a phone if there's a problem at closing and call somebody directly rather than like press one for this person, press two for this department. And you're like, oh my God, like I need this money. I'm at the closing. Like this is not what I wanted. I want to know that like I can call or text somebody and automatically speak to a live person. I think that's something that we all kind of really appreciate. Um, Going through a couple of things that you said, um, I would love for you to give the definition of points for us.
Right. So a point is equivalent to a percentage. So if it's 2
Hmm.
points, it's essentially 2%. And typically on a hard money loan, points are paid at the closing. So there's sort of an upfront origination fee, closing fee, whatever you want to call it.
Hmm.
But it's a standard part of hard money, and you're going to pay some range of points. Today, the go market is mostly like 2 to 3 points. And again,
Hmm.
typically you're going to pay that upfront at the closing.
And that's in that fee basically to borrow that money.
Correct. So it's part of the cost of borrowing money. And again, so if your loan is $100,000, let's just say it's $70,000 for the purchase and $30,000 for the renovation. Your total loan is $100,000. If it's 2 points, you're going to pay $2,000.
Hmm.
That's part of your closing costs.
Okay, that's very helpful. I feel like that's once again, I'm trying to think of all we're kind of myth busting what hard money lending is here. Actually, that's going to bring me to my next question for you. One of the most popular questions that now kind of down the line here that I see in the group is people asking if there's hard money lenders that will lend 100% of the money needed for a property. Is that true or is that false?
So it's a little bit of a complicated question. I think,
Hmm.
yes, it is true. But the ones I've seen, you have to see how it's structured and really understand it. If you have no option, now we don't do it,
Hmm.
right? We don't do 100% financing. To us, part of our models, you have to have some skin in the game.
Yeah.
But if you have no option and you have no money and you think you have a really good deal and you can make it work, it could be a good option for you to get started. But from my
Hmm.
understanding, the ones I've looked at and analyzed, it's going to be expensive and it's not truly 100%, right? So they might be like they're escrowing interest payments, or they're giving you your first draw up front. And then as you go through your draws are going to be reduced, right? So
Hmm.
there are, I don't want to talk too much about it. I would say there are options close to or 100%. But to me, typically it's a last resort and you really have to dig in the numbers and understand because it's usually complicated and expensive to do it. But it could
It
be a
sounds
good
like because
option.
you're
You
gonna be
have no other choice.
it just sounds like you're going to be paying kind of in some other way, right? Nothing's free in life.
There's no
So,
free lunch.
and even like we talked about, like even with the loan, how, to pay those points, which is kind of like for access to that money, like that still is a cost, right? So maybe you're getting 100% of the loan, but there's still other fees that are associated that you are still going to need
Or I think
some
sometimes,
cash.
right, you're getting $100,000, but now your loan is actually $110,000, and you're paying interest on 110.
110.
You know what I mean? So again, that's why I say you have to really understand and go through the numbers and make sure you understand exactly how it's working.
Now, can you explain, you were talking about drawing money, like it's different time points. Can you explain how that works? Because I feel like most people think, oh, I got a hard money loan. I'm closing on a loan. They're going to give me a check for, $200,000. And
Yeah.
then here I go on my merry way and go renovate my property.
Not quite. So let's go back to our example of $100,000 loan. It's a purchase
Hmm.
of $70,000, or we're giving you 70,000 towards the purchase and 30 towards the renovation. So what happens
Perfect.
when you're starting the loan is you're going to give us a renovation budget. And it's, different lenders have different levels of detail. Ours is pretty simple. And, it's $5,000 for rough electric and $4,000 for new sheetrock and $3,000 to paint the whole house, right? There's a budget. And we agreed to that budget at the time. And the house is appraised based on that budget, right? And we come up with an after value. So now we have the loan, you got your $70,000 towards the purchase. We are going to reimburse you for the renovation money as you do the work. So yeah, I think we said $5,000 for rough electric. You call us up and you say, hey, can you come do a draw? Your rough electric is done for $5,000. Your sheetrock is up for $3,000. Here's $8,000, of your $30,000. And now your principal, so now instead of having a principal of $70,000, you're now paying interest on $78,000, right? A couple of weeks later, you call us and you say, now we have the bathrooms done, right? And we give you another $10,000. Now you've gotten $10,000. Now your loan is $88,000 and you're paying principal, you're paying interest on $88,000 until the project is 100% complete.
Gotcha. So then sorry, just to follow that then. So then are people still paying then out of pocket for some of the renovations, then being reimbursed when then they complete the work?
So typically the first, if you think about it, you need the money to get the first phase going until your first reimbursement, and then you're kind of calculating it. Different people have different, if you have a close relationship with a contractor who, maybe you're just giving him a small deposit and he knows you're getting draws. And as soon as you get, the draw, you're going to pay your contractor. So people do it differently. Yes, but it's a great point. It's something you have to figure out in your numbers. You have to have some money to get the project started.
Okay, that's really helpful because, like I said, I feel like one of the biggest misnomers is hard money lenders is that they're just going to give me all the money I'm going to need. I don't need a single dollar to be able to purchase things, and that's just not the case.
Because if you think about it, we're lending against the after repair value, so we have to protect ourselves that the money we're giving you is increasing the value of the property.
Exactly, and that work's also going to be done.
Correct.
That's and also once again,
anyone wouldn't do the work, but.
No, of course. But listen, we all know in construction that there's 1,001 things that could actually go wrong. So it's also been more beneficial to you to have this project completed, right? If all of a sudden this deal falls apart, you want a house that has work done, not that dilapidated thing that you originally decided to fund. You want it kind of closer and along the way. So I like that systems of draws. It's almost like a checks and balances system along the way, as you kind of go. So okay, so next question that I have for you then is, are you lending specifically to people or do you lend to LLCs?
So hard money lenders only lend to some kind of business entity. So it could be an LLC, a C Corp, not individuals. We can't lend, we're not actually licensed. So that's why
you're not a bank.
They're business loans, exactly. They're business loans. They're not personal loans.
So let's say then I say, okay, great. I can't go get my loan from a bank. So cool. I'm going to use a hard money lender. I'm going to go make an LLC today. I'm going to call you up, Michael, tomorrow and say, hey, I want to buy this house for $100,000. So can I do that? Are you going to say, well, you made your LLC yesterday. I need to see something more established. What do you then look for when I come to you? It's perfectly fine that I created my LLC yesterday.
Yeah. So your application is going to be your personal situation. So your personal finances, your personal real estate experience, and then the loan will be to the LLC. So whoever's a member of the LLC has to submit an application. It's important, that to be transparent, which all lenders should. You are personally guaranteed. So the loan is to the LLC, but you're signing a personal guarantee as well.
Gotcha. So then what are the things, since it is that personal guarantee, and then looking at the members of the LLC, right? The people that own that LLC is what that means. What documents are then you asking me for? Do you check my credit? Do you look at my DTI, my debt to income ratio? What are the things that then you're going to look for in that application?
Yeah. So we look for your typically your monthly income and expenses. We look at your personal.
And that's my personal, not the business side.
Correct. We look at your personal financial statement, and we look at your experience. And then, yes, we run credit as well.
Okay. That's something that I feel like you always hear, oh, there's no credit checks, there's no income verification. So that also sounds like then maybe a red flag to kind of stick in the back of your mind when someone's saying, oh, that they're a hard money lender and they're saying they don't check credit, they don't check income, they don't do any of those things. Would you agree with that?
Well, there's no tax returns. There's no,
Hmm.
we don't typically ask for pay stubs.
Yeah.
For us, it's a very much a knowing our clients, getting to know our clients and trusting our clients.
Yeah.
But yes, of course, there is definitely, some review of financial information, you have to, right? You're lending money. So yes, if someone
Yeah.
says no credit check, no looking at income, we don't look at the income ratio, no looking at income. For us, experience is a really important factor.
So tell me about experience then. Does experience, if I own rentals, but now I'm coming to you because I want to do a flip, does that count as experience? How much experience is experience?
Yeah. So if you buy and own rental, some level of real estate experience, right? So either
Okay.
you've renovated rental properties, you've done a flip, you're a real estate agent, you're a contractor. Contractors are great.
Hmm.
You probably know that's where people often run into the biggest trouble. So if you're the
Yes.
contractor, you really have a leg up. So we're looking for some level of real estate experience and understanding, and really understanding what you're getting into, and no disrespect, but not that I watched Chip and Joanna flip a house last night, and now it seems like fun, and so I want to flip a house also. That some level of
Yeah.
experience, because that is the number one indicator of whether or not someone's going to be successful.
Exactly. And by success, you mean by them being able to complete the project that you're loaning on,
Yeah, yeah,
right?
yeah.
So,
And because of our style and being a family-owned business and how we work,
mhm.
honestly, we're doing it to protect them as well, right? So I'll talk with people, and I've done it where I said, listen, you're just getting started. Find someone to do your first project with. Protect yourself. You might make a little bit less money, but do it with someone. I've paired up people who I know. Hey, this person's in your
Mhm.
area. Maybe for a small fee, they'll help you through. Because so many people really get hurt thinking, as you know, real estate's easy, and it's not. It's great
Yeah.
for a start. It's not just simple. Yeah, I'll hire a contractor, fix it, and great, I got my new property.
Exactly. Make $1 million, right? It doesn't just kind of all fall together in that. So when looking for the hard money lender that someone should partner with, what are some basic questions that they should just ask to learn to see if this would be a good fit for them, either relationship wise or also then for the project they have in mind?
Yep, great. So how long have you been in this business, right? Uh,
Hmm.
then, of course, what we were talking about. So what happens as we go through the process? Am I talking to, if Michael, am I talking to you all the time, or are you just taking in my loan? And then there's going to be 8 different people that I talk to. And then, of course, rate, points, application fees, processing fees. We'll ask them on the renovation loan, is it full boat or as dispersed? That's what we were talking about. Are you, paying it
Hmm.
renovation?
Yeah, if you get it all in one spot or at kind of these different time points.
Well, no, you're always going to get it trickled out, but are you paying interest on the whole thing even before you have the money? That
Hmm.
that's a big one. Um,
Yes.
Inspection fees. How long does it take to get the money once I request an inspection fee? Those are
Okay.
those are the big things that I would say. So, for example, with us, sometimes our rate sounds a little bit higher to people.
Yeah.
No application fee, no credit fee, no processing fee, none of that other stuff. So as I always say to people in any industry, competitors know what the other one's doing. You know what the
Yeah.
market. You can't survive by being way more expensive than someone else. So
Hmm.
make sure you have all the numbers, spread them out, compare them. And a good lender, by the way,
Yeah.
I've had lenders, clients come to me and say, hey, look what this person's showing me. And we go through the numbers and I show them, why, how it all sort of evens out.
That's helpful. So are those numbers and rates with a hard money lender, they would be the same as if, Becky called you versus, Laura called you, everybody, it's kind of the same structure, or would you still look at my experience versus somebody else's and almost have like a personalized set of terms?
There's a matrix, there's certain standards, but yes, someone who's done 8 loans with us is going to have a different rate than someone who's done one flip in their career and just starting, right? Someone with a
Hmm.
780 credit might have a different terms than a 680. And it might not just be about the rate, it
Yeah.
might also be about the percent of the cost of the project that we're going to give. So maybe we're
Mhm.
giving you 90% of the purchase and someone else less experienced is getting 80% of the purchase. So it's not just about rate. So it's typically experience in general, experience
Yeah.
with us, and then credit score, those things are the kind of the things that fit in.
So I liked when you said matrix, because I'm kind of picturing like a chart being like, okay, so based on this experience, this credit score, okay, then matching it up kind of on these two, this
Yeah.
X and Y asymptote here is kind of where that
Yeah.
person's going to fall and what those terms are. So I think that goes back then to making sure, once again, what's the most important thing, as we talk about a lot on this show, is knowing your numbers, making sure that you know all the fees that are associated. We want to make sure that we know what our numbers are and what the terms of our loans are, before we kind of like move forward with agreeing with things. So I think that's a really great reminder. And also, I'm sure you get this too as a hard money lender, between either hearing this from other people or even people directly like saying this to you, is, oh, but the interest rate for hard money lenders is high. And it's, what do you say back to a person that would come to you with that?
So I say all the time, and I do something called Hard Money 101, and I have a chart. It's about, does it make sense for you in your particular situation, right? So as I said before,
Yeah.
you have Aunt Becky who will give you the loan at 6%, then you should do it, right? But if you don't have Aunt Becky and the deal is, well, I can either make $40,000 on this deal,
Yes.
or if I don't use a hard money lender, I make zero on this deal, right? Then obviously it doesn't matter what the interest rate is if you can still make $40,000. And then again, the other piece is, do you want to get to scale, right? Do you want to start doing it? So even sometimes I say to people, if you have your own money to do it, right? But typically your own money, it's going to be one deal that you have your own money for. Do you want to be doing 2-3 deals at a time, or at least be able to get into contract on another deal, right? So I say all those things. Look, I say to people all the time, I'm not going to spend your money. I'm not going to tell you how to spend your money. But as you said, it always comes back to look at the numbers.
Yeah.
Percent seems high, but even paying 12%, I can make $40,000. Okay, don't pay 12%. Don't do the deal, and now you made zero.
It could not have been said better, Michael. Thank you so much. I say that to people all the time, not only when they talk about either interest rates, they're hard money lenders, or when they talk about the taxes. Once again, being New Yorkers, you hear, oh, taxes are so high. Who cares? If you are still making the money that you see fit, you're still getting that cash flow that you're looking at. There's actually a larger cost to kind of not moving forward with that deal. Cool, the interest rate's higher, but if your numbers still work, who cares what that number specifically is if you can still get the cash flow and are you bringing in that extra money that will help you get closer to your dream of financial freedom. So Michael, thank you so much. I think you did a great job kind of really dispelling so many of these different myths that we have within hard money lenders. I think this was really, really great episode for our ladies to really learn what their options are and what to ask. Any other last tips or tricks that you would like to share with the group about approaching hard money lenders or anything within this topic?
Well, first of all, thank you for the opportunity. I really enjoyed it. It's great for the opportunity to have you. As I said, I think the most important thing is, when you're an investor, your real estate becomes really personal to you, right? Like it's a really important issue. So find a lender who you feel good about, right? Make sure you go through the numbers, compare apples to apples, make sure you're getting all those numbers that we talked about. But most importantly, I think make sure it's someone who you feel like you trust and feel comfortable with, and you feel is going to be really your partner as opposed to just your lender as you go forward.
Yeah. And honestly, that was one of the reasons I was so happy that you agreed to come on, because when I met you through one of our local meetups, that was actually how I felt about you. I felt like, okay, this person clearly hears like what I'm doing. They get what I'm looking for. And you were just so approachable with me and willing to answer basically all the same questions that we just went through. You and I had actually talked on multiple phone calls before about that. And it's really you've really taught me so much about hard money lending, using it appropriately. So I'm really happy that you were able to come on and share this information with the rest of our ladies. So I'll make sure to put your contact down for our members if they would like to reach out with any follow-up questions. I'll make sure to put that in the show notes. Also, ladies, you can always find our great service members that we know are helpful for our community on our Lady Landlords website at lady-landlords.com. If you look there on our partners page, you will also be able to find Michael's information there. So Michael, thank you so much for coming on and representing Rocky's Funding today. I appreciate you showing up today.
Thanks, Becky. I appreciate it.
Of course.